Hello guys, can you hear me? Hello guys, can you hear me? Hello, hello. So we are ready for the first streaming. So I'll try to keep it very, very informal, as is the first one, and it's Friday, and we have the long holiday for the market. So I'm not expecting a lot of volatility. So we'll check a little bit the chart, and I will take some chart requests, and I will try to answer all your question. But trading wise, I'm not sure we will find many setup because again it's Friday, and until Tuesday the market will be closed, so not really worth to trading. But if we find something, we will try to take some trade. So I see some friends, Ahmad, Arnaud, and all the others. Thank you for connecting and for coming. I'll try to keep the streaming regular, at least once a week, probably on Friday. But then we can make some poll or something to decide what is the best day and what is the best time to accommodate everybody's schedule, to have more people as possible joining and to see charts together. Wanted to start with a shout out to the sponsor of the video, that is Zoomex. That is a pretty cool exchange. Is non KYC, so very simple to use, and I will show you after some cool campaign. But you can find in the description of the video below a referral link where you can get a nice cashback, but we will see it later on. Yes, Joseph, we are making history today. First streaming, so I'm a little bit emotional. So allow me if I make mistake, and allow me to have a very strong macaroni accent for the first time. I'll try to improve as we go on. So just to begin to start the Bitcoin chart, I'll just make a quick Bitcoin update, and then if you have question on Bitcoin or other chart, I will let you. I will try to follow your request, so we keep it informal, and I'll try to keep as much as useful for you and for the doubt you have. I mapped this chart, but usually I like to start from a naked chart, so to make it super quick. We all know that Bitcoin is downtrending, and there is two factors that make the situation a little bit worrying. The first is that we'll host this range that is so far to be considered a distributive range. To give context, this is the first time it's happening since probably 2 years. As you can see, since we got out from the, let's say, bear market downtrend down here, all the ranges we had, they have been deviated, they have been reclaimed, but all the ranges we had ended up being accumulation range. So what does it mean? Whenever the price is going sideways inside the range, as long as the price remain inside the range we have a neutral bias, so we don't know how the range will resolve. Once the range resolves to the upside, we can call the range an accumulation range, so a place where market maker did their business, accumulated, and are ready to move the price higher. And whenever the range is breaking down, we can call it a distributive range. So means that the market makers or big buyers, big seller, took profit on this level, they are happy with their position, and now they are not in tension anymore to buy and to reverse the trend. So I give a lot of relevance to this range we have here at the top at 108k because it's the first range that so far has resulted on being a distributive range and has started what is clearly now a daily or high time frame downtrend. As you can see, something similar of what happened up here back in 2021 or what happened with this range back at the end of 2021. So this is the first important matter of concern for Bitcoin and for crypto in general. We do not draw conclusion. I just try to be objective. So this range can be reclaimed. Should this range be reclaimed and making all this current price action we are having since the end of February a big deviation below this range and getting a reclaim of the 92k level, then we can change our judgment of this range. We will not call it anymore a distributive range, but we will say this was an accumulation range where we had a sort of power of three setup where price accumulated, manipulated, and then started to expand again. But for the moment, as long as we stay below this 92k level, this range that we had at the top is a distributive range. The second range that we give relevance is the current range we are trading since almost 2 months. And this range gives a little bit more positive, let's say, vibes, because this range was deviated here below, was reclaimed, and now potentially the price is trying to hold this range. Hi Ahmad, welcome, brother. I will give you a shout out later when I reach to your template, but it's ready here for the cooking. So as long as we trade inside this range, once again, as I said before, the bias inside the range is neutral. So means that range are neutral formation where the price move sideways, so it's not going up, not going down, but potentially going sideways. So as long as we trade above range low that is here around 78k, from a purely range perspective, after we had this deviation here, as long as we hold this support here and as long as we range, therefore we expect mere range to be respected and range high to be visited next. So simply put, as long as Bitcoin is above 78, we do have a mild bullish argument to trade the other extreme of this range, always, let's say, in a bearish bias on the daily or the 12-hour structure, but as long as we stay inside of this range and as long as range low hold, we can expect a visit to range high. The situation would change, of course, if we break down this range and we continue doing what we have been doing on the past week, that mean downtrending. So this very, very broadly the definition of a potential bias here on Bitcoin. All this explanation going to the level that I selected before the streaming, just to have it quickly, and to make it very simple, I use two ways to select ranges. One is to use the first swing low and the first swing high. That, for example, for this range would be this swing low and this swing high is the first swing slow and the first swing high of the sideways price action. And similarly on this range would be this swing low and this swing high. So this swing low and this swing high on this second range. The second way to select ranges, and I use both to add the confluence to my analysis, is the volume profile that you know I'm frequently using, and it applies the same concept. So you take the beginning of the range, when the price start to go sideways, you select all the ranges and it will give you three important levels as all the ranges: range high or value area high, mid-range or point of control, and value area low, similarly to range low. So before the streaming I mapped these two range and I got these two value area high, the one of the previous range up here, the one of the current range somewhere here, the two value area low of the previous range and the current range, and the 2 point of control. So now, sorry, the point of control somehow here disappear. So the point of control here would be exactly where we are trading in this moment. So the current price action is not, let's say, the current level is not really interesting because we are very close to the point of control. And I know I'm a broken record, but whenever you see price ranging, so moving inside a range, the last place you want to do business is mid-range, for a simple reason, at least on the time frame the range is developing, because you want to buy as close as possible to range low, and you want to sell as close as possible to range high. So basically you want to short as close as possible range high to move to the other direction, and you want to long as close as possible to range low to move to the other direction, that it would be range high, especially simply for a risk reward ratio in a range environment. If you trade mid-range, your risk reward totally sucks, because it would look something like this for the long and something like this for the short. So what they use in technical terms, you want to buy discount and you want to sell premium. So on high time frame, Bitcoin is trading at the less tradable area, that is the point of control, so not really an area to do long-term business. Then we can see that here in low time frame we are developing a little range that perhaps can give us some bias or some trade setup for scalps around this level. But to clearly see that this level point of control is a super choppy level, look at how many times it was sliced, it was traded since the 28th of February. So I'm not gonna count it, but you can see it by yourself that was traded at least 50 times, making it a super choppy level where a lot of traders waste their money and they're getting chopped out by the market. While the range extreme, wherever they have been visited, as you can see here, or as you can see on the top here, they've given a good edge to trade to the other direction. Let's check. I think I will keep the Bitcoin, let's say, analogy not too long. So to conclude this, I'm already long from this area here, so I'm not interested to long again range low, but any drop here could potentially justify a long. What I'm more interested is to short this level that was topless. As I posted on the Monday weekly update, this level is interesting for 3 reasons. First is the downtrend. Second is the current range high and resistance, that is this value area high or the resistance we had from this high here. And is also an interesting level because it's the former support of the previous range that has now turned into and that is now potentially turning into resistance. So all this blue area is a super interesting level for short, at least for my style. to trade something going down back, to continue the trend, to go back to the point of control and potentially to value area low. We do have confluence here of two further level. So the zone I'm looking is this blue box from the current range value area high and the previous range value area low that moves from 93.2 to 89.5. So this level, to further define it, has some confluence on this supply that was the last green candle before the further market structure break, the 0.75 Fibonacci of this bearish Fibonacci retracement. So all comes along here, and this level that we will see is interesting. That is a level with the two equal highs at 88.8. That is a very big, important, untapped liquidity level that, if swiped here with a wick, will be a very interesting level for a potential price reversal. All is clear until now. So if you don't have any question on the chart itself, I'll just move on the other chart that I'm usually monitoring, just to show you some further level. This is the trading light chart that I just use to have further confluence for the liquidity. Just for you to know the setting, I'm usually taking from 150 BTC above, so to see order of more than 150 BTC. So the interesting level, as you can see here, is this 88.3K. That is exactly the equal highs we have more or less here at 88.67. So this is a very interesting liquidity level. It's a liquidity wall. What you want to see in this level, should the price visit that level, is a weak and a strong rejection. So means that market makers went there to take that liquidity and move the price moving lower. Yes, Experience Life, I see you have some lag, probably it's from my end because I'm using the 5G. I'll try to move slowly to the chart so you don't have too much lag from my voice and what I'm showing in the chart. But let me know if you still see the lag. As you know, it's the first streaming, so I'll try to solve the problem that you mentioned me during this stream. The second level closer to the price for the liquidity is at around 80K, and this 80K level is what we have down here and at this 12-hour OB, and this is the level that potentially, I say, if somebody is not yet long, can look here for long, because there is a liquidity just here at around 80K. Yeah, I'm reading your message, guys. Probably the voice is not coming always in line with the chart, so I'm trying to move the chart as slower as possible so you don't get the lag and you get the meaning of what I'm trying to say. So then there are liquidity level further up and further down on the heat map here in the trending light, but I'm not really taking into consideration them right now. I'm more focused on the liquidity cluster just above current price and just below current price. The other part I keep usually on my trading light is this one that give the volume profile. So it gives you a quick look on the point of control of the session and the general volume profile of all the period visible. Thanks, Joseph. We are all home here. So here, on here you can see on the right the volume profile of the current range. This is from 28th of February until now. That is the range we have been ranging on the past 5-6 weeks. And here you can see in white the point of control of all this range. So it's the same we have selected on TradingView, and you see that we are exactly at that level. So the latest level you want to do business. As you can see here from the volume profile, this is the most traded level of the past weeks. Also, this white level that you see here are the session point of control, and we do have another level, let's say, above us interesting, that is in untapped point of control of one of the previous session we had a couple of weeks ago, and this level could also be a resistance level, and this again is around 87k. So all confluence with the resistance that we saw before on the standard chart. So this mainly I keep it to have a view of where we are, where is the liquidity, where are the resistance level, and where are the potential support level. The next chart I want to show you that I usually use is a very simple Velo chart. Velo chart is free, so you can use it. There is a lot of setting. I keep it pretty simple. So I use the price with the volume. Then I just check the open interest. I check the aggregated spot volume to see the general spot volume of the move in the price. And I keep here down two that are very similar, is the aggregated liquidation standard and the normal liquidation coins. These are very similar. It shows some difference, if I'm not wrong, within the leverage and the spot. So here on the Velo chart, I see two factors that are not really promising. The first one is that while the price move up on the past days, since the last 8-9 days, also open interest increase. This we will see later the reason, while the spot volume didn't increase much. So this is mainly showing us that most probably, or almost for sure, this current move that we had from Bitcoin from 80k, 79k was mainly perp driven. The other factor important that I use in the Velo chart is the liquidation, because usually you want to enter after a big liquidation cascade. This is the best place for a mean reversion trade, and this is what we had down here when we drop and we took out this low here. We did have an important liquidation event, we did have a spike on volume, and the price started to revert. And more or less after this event, with this important liquidation, with not a big move on OI, on open interest that shows an interesting level, not just in pairs, but also on spot, this was a good level to enter long, and also for other reason is the level I took this long days ago that I posted almost everywhere. So here we had the liquidation event, Down here we had the liquidation event, and after the liquidation event we reclaim range low, we got a retest around the range low, and was a very good place to enter long. Experience life, you can get this chart in trading light, the one here with the liquidity, but you can have similar chart also on CoinGlass and in other platform for free. So I'm not really recommended to take the paid version of Trading Light, because you can find it very similar in CoinGlass. Let me show you how it would look on CoinGlass. In CoinGlass would look something like this. Yes, also Marco, I'm answering the same question. So the liquidity and the liquidity map and volume profile, this is Trading Light, and I think it costs like $15 a month. You can get this indicator here in the bottom about the volume profile in TradingView. It would not look exactly the same, but the data are the same, so you can get this below chart on TradingView. Just look for visible range profile, that is this one, and session volume profile. That is the one you have here in the center with all the session. So I repeat it again, Marco. This is volume profile visible, and this is volume profile session. So VP VR for the one on the right, and VP SV for the one on the left. While the top chart with the liquidity, you can get it in the Trading Light, but it's a paid version. Otherwise, you can all get it for free. I'll on the CoinGlass. The last chart that I usually use, and a shout out to Ahmed that is here hearing us, is the one that I use on aggregated. The aggregated chart is a custom template that Ahmed did for me. So you can be in touch with him on X if you want. He's making a wonderful customized template. I use it for two reasons. One, here you can see all the volume, all the buying pressure, selling pressure across exchanges. And we have Binance Spot, Binance Perps, Coinbase, Bybit Spot, Bybit Pairs, and Bitfinex. And from here, I can see that mainly on the last session, on the last days, most of the volume came from Binance Perps, that here the second one, while most of the exchange on spot, on the spot size, were selling. So as you can see, is red on the Binance Spot and is red on the Coinbase, so not really a good sign. At least we can deduct that the recent move was perps driven. You can see similarly here on these two lines, the blue one is the perps and the green one is a spot, and as you can see, perps is going up while spot is moving lower. So these are usually not really good combos. If you want the price to move higher, you want to see more a spot buying pressure rather than a perps buying pressure. So hope all is clear on Bitcoin. Let me know in the chat if you have any question, and especially if you want me to answer question of what I've been showing you until now, and if you have some chart that you want me to watch, so we can look some further chart together. While you think about and you drop me some requests on the chat. Once again, a shout out to Zumex, that is the sponsor of the video. As I was saying, Zumex is a very cool exchange. Is backed by Bybit, so basically you get all the function and all the liquidity of Bybit, but with a but is a non-KYC, so you don't need to give your data, your identity to trade with. If you sign in with the link that you find in the description of the video, there is a cool campaign with a 100% deposit cashback on a 100 first deposit in USDT. So you simply make the first deposit and you will get back $100 for trading bonus. Is available only for the first 50 people, so try to join. It takes really few seconds to register and to deposit, and you can immediately get this 100 bonus that you can trade with, and you can keep all the profit, and if you lose it, nobody will ask it back. So it's a win-win situation, and it's a very high cashback because it's the 100%. Going back to Bitcoin, and once again, if you have chart request or some coin you want me to look, just drop me a message on the chat and I will check them. What I wanted to check together was the little range we have been trading in the last few days, because probably from this range we can develop some trading plan for the weekend. So night time frame, you know that we don't want to make business here at the point of control. But on low time frame, this I think is starting to be a very actionable range. Marius, I saw your question. I will answer, and I think is relevant also to this range we are here now. So here here we started to trade on this little range since 12 of April, so 6 days, and this gives again gives you a very good visualization of how much the point of control is a choppy level, because since 6 days, 7 days, we are basically chopping around the point of control. So now you understand why I'm always a broken record, and when I say that you do not want to make long-term business at the point of control or mid-range, because it's a very choppy level, and you can see here how much this level has been chopped over the past weeks. What I found interesting is that this range is starting to be very well respected, and when you want to see the reliability of a range, you want to see two aspects. Range low is formed, range high is formed, and then you want to see mid-range respected. And from a quick visualization, I can say that this mid-range is very well respected. So now the way I would look to now the way I could trade this range is with any sort of manipulation. Manipulation that should occur at the extreme of this range. So now this range has been, let's say, traded a lot inside, and I'm starting to develop a feeling or a bias that until this range is properly deviated, we cannot find a resolution. So when you start to see this strong choppy price action sideways price action, you want to see a manipulation before moving to the other direction. Why? Simply because as long as the liquidity is not taken and there is a manipulation outside the range, it's difficult for market makers to really get out from this range. So I'm not sure we will get a manipulation, a deviation. Maybe the range will simply be broken, but in a clear range like this, whatever happen below the range in the form of a deviation and then a reclaim inside the range, or at the other side a deviation and then a reclaim, for me these are all trigger for trades, for potential trades and for potential short or long opportunity. As long as we stay inside the range, my bias is neutral, so I'm ready to trade it both way as long as we get a deviation. How I would like to see the deviation, so let's say that the range is deviated below, I would like to see something like this with, let's say, three factors to trigger and to take a trade. First one is to have the deviation, so to have all the liquidity built on the lower part of the range to be taken out with the deviation. So a nice sweep of all this liquidity would be the number one. So the number one would be deviation. The second that I would like to see is a range reclaim. And how do you want to see the range to be reclaimed? With a market structure break. Then I don't know how the price action will look when we reach there, but the third part is market structure break. Should we have, number one, the deviation to take out all these lows? After the deviation, a range reclaim, so price finding acceptance back above range low. We want to see a market structure break. So whatever was the last lower low, we want to see a lower high, we want to see a higher low, higher high. And once this happen, for me, this trade would be triggered and I would try to long something somewhere here. So the same if we move first for the other side of the range, we want to see the same. That would be really the mirror of what we explained for the potential long. The range reclaimed bearishly and the bearish market structure break. So I think this range is very actionable, and whatever we get, any sort of deviation, range reclaim, market structure break, then this would trigger whatever a long or a short according to where this is happening. So I'll put alarms both on the top and on the bottom of the range, and if the price action start to reach that level, I will look for what I've explained here in the chart. I'll check a little bit the question. We are basically chopping around the point of control. So now you understand why. Okay, we'll check the Monday range. Thanks for the macaroni action, Daniel. I really glad you like, and I hope it's clear and you can understand me. So there was a question of the Monday range, and I think it's pretty relevant on the current Bitcoin price action. Let me clean a little bit Monday range. So the question was do you use Monday high, Monday low? If yes, how you're using it? I'm not really using it, but I was using them in the past, and they can give you an edge, especially at the beginning of the week. Let me give you an example. So what is simply Monday range is basically using for the weekly plan or for the intraday trading plan, because it gives you an edge on the current week, especially when we have price action that is not moving much. Let's take some example. This is Monday, yeah. Let's check some Monday range. This is a Monday range. And this is potentially another Monday range. This one here. So just to see how price behave within the Monday range. I do things that Monday range are useful and relevant in a choppy price action, and they are not really useful on a trending price action. Why? Like it happened here. This was a Monday range, this black one. But as you can see, we did have a little deviation of the Monday range. We went back to mid-range of this Monday range, but then price moved on the other direction. So whenever Monday range is broken, it's becoming not relevant anymore much. In this case, then price find acceptance back inside, and you can see that there is a relevance. So more or less, the Monday range has been respected. If we look at this red one, very big, was completely irrelevant, let's say, because it was very wide, while the current Monday range could be, was possible to be traded, especially because, let me clean the chart. Especially for what happened here. So as you can see, the Monday range for me here with the low and the high of Monday, and there was a very clean deviation, and the price find acceptance back below. So technically, these Monday ranges trader were able to take a short here, and I saw several people that use Monday range taking this trade. But simply to go back to your question, Marius, as long as the price stay inside, whenever Monday range, Monday low or Monday high are deviated, you can try to trade to the other side of the range. Whenever Monday range is broken and price start to move above or below it, simply discard it and don't consider the Monday range anymore. So the relevance is when we chop inside, and you always try to trade the deviation like we had this week. I hope I answered your question, Marius. Let me know if it's not clear. I saw Marco asking for hype and Farcoin, so I'll check them quickly. So this I think was a setup I was looking for, but we never get the